Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, September 24th, 2022, and this is another edition of my Weekend Review podcast where we talk about the trades that I took, why I entered them, when I entered them, how I'm going to manage them going forwards. But we'll get into all that. But thank you so much for coming. Appreciate you investing your time here. I hope that it is paying some type of dividend and being helpful for you to invest your time in watching this podcast. So, wow, what a week we had. My gosh. The hits just keep on coming. It's been tough to be a bull in this market over the last couple months for sure. But you know, we're going to do the best we can. We're going to look for the best setups we can, good risk to reward ratios, confluence combination of indicators and supports lining up. But we'll get into all of that. Here is the plan and the format for today. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back and then we're going to start taking a look at my current positions. We're going to talk about when I bought them, why I bought them, how I'm going to manage them going forward. I do have some closed out positions. I have some open positions that we will go over as well. And hopefully that will be helpful so you can see how I kind of put the trades together, how I set my emergency stops, how I have my end of day stops, how I positions correctly. And you know, the thing with trading is you really cannot control the market. You can control yourself, and that's really what you have to do. And after we take a look at my current positions, we are going to talk about trader psychology, and it is the most important skill without a doubt. And if some of you were not aware of that in the markets that we have here, that probably drove the point home of how important it is to be psychologically stable and basically having a plan. You have to have a plan in this market. You know, Jerome Powell came out last Wednesday. Market didn't like what he had to say, and boy, have we gone down. It's scary. It's pretty scary, but you have control over what you're going to do. And like I said, you know, the key points are position sizing correctly based upon the volatility, looking for confluence, this combination of indicators lining up, setting your emergency stop, getting out quickly if you're wrong on your end of day stop, which last week I'm really glad I took my stops because, you know, it just continued to go down and go down and go down. So we'll talk a little bit about trader psychology. After that, I do always like to go over a poem from my good friend Frank, trading poem. It's always relevant, pertinent to what's going on in the market, so that will be fun as well. After that, I have gone down through my entire stock watch list, and I have identified some potential entries that I will be interested in next week. And so we'll go through each one and I'll explain what I'm looking for and the confluences, the combinations of signals and the supports and the analysis. So we'll go through that. So I hope you're staying safe out there. Like I said, it was a tough week, really tough week. Wednesday, Thursday, and Friday were incredible, really. But you know, keep an open mind. The market doesn't just go down, it goes up and it goes down. It is a market, and let's just wait for those signals, right? Let's just wait for those signals. Eventually we will have some kind of rally. Eventually, I have no doubt of that. And so just hang in there, hang tight. I'm going to run the U.S. legal disclaimer. I'll be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Geez, sorry about that. I forgot to hit the record button or the mute button. So anyway, had a few minutes of silence there. Hope that's okay. But all right. First off, let's take a look at the current positions that I have and the closed positions that I have. And starting off with Microsoft. So I did buy Microsoft here on Thursday on the 22nd. Really like this setup, and I was hopeful for this setup. I really was, because Thursday was a down day. Microsoft was up on the day. I did get long Microsoft here on Thursday at 240.86. Reason is we went under 30, over 30 during the day. We also went under the negative third ATR channel here and closed back above, and also came on strong volume to the upside. And as I just mentioned, it was up on Thursday when the market was down, so it had really good relative strength. So that's why I entered the position. Main reason I entered the position was the intraday under 30, over 30. Got long here at 240.86. Red line down here is my emergency stop. My end of day stop is the opposite of why I took the trade. Why did I take the trade? Under 30, over 30. So that's the reason I took the trade. So my end of day stop would just be the opposite of that if it closed back below the 30 RSI. So I entered here 240.86. Yesterday we had another big down day. It did close under 30 RSI. You can see over here it closed at 28.82. So I did take a small loss on it, 0.88%. Now, if this were to close back over on Monday, back over the 30 RSI again, I would definitely look to enter Microsoft again, but did take a 0.88% loss on this particular position last week and closed it out for a loss. IBB. All right, I did buy IBB on September 19th here. Little different setup. We had a fair value gap between here and here. We had an order block here. This is ICT trading style. Please look him up, ICT Mentoring on YouTube. Really good channel, really good setups and approach, but of course not every setup approach works. But we did take out this previous high here, change market structure to the upside. We did have a nice fair value gap. That's why I bought it. I bought it on the 19th at 121.64. Of course, place my emergency stop down here. But it did close on the 21st below the pivot, the previous low, and that was my exit. And good thing I got out, because the next couple days it just went down and down. But unfortunate, this was a loss of 3.11%. Verizon. Well, have not hit an emergency stop for a while, but this is a good example of why I use emergency stops. I did take Verizon here back on the 16th of September. We had an under 30, over 30. We also had a false breakout from this previous pivot over here. Got long 41.12. Now, if I go under 30, over 30, my end of day stop is going to be a close under 30. But what about if it just keeps going down during the day? Well, at some point I have to have an uncle point and say, hey, that's enough, right? And that's why I use my emergency stop. So I did get long Google on Friday, and I'll take you through exactly how I set this up. But anyway, did buy Verizon under 30, over 30, false breakout to the downside. MACD was green. A lot of volume came in. Felt good about that, but no longs worked this week whatsoever. Next day held steady. Next day came down, closed back under 30 RSI, but I did hit my emergency stop. You have to have a dollar amount that if you lose, you say, okay, that's it. I don't care if it comes back during the middle of the day or at the end of the day. I make the majority of my buying and selling decisions based on end of day, the close of the end of day. So, but if it just keeps going down all day long, you have to have an uncle point. You have to have a place where you say, I am wrong. And unfortunately, on Wednesday, it got there. So I did take a 3.73% loss on the trade. I have people ask me, so did you lose 3.73% of your account? No, not even close. And I'll get to that when we get into the position size. But yes, on the trade, 3.73%. But as far as a percentage of my account, no, much lower than that. Okay, so those were the three losing trades that are open, right? Or not open. Those are the three trades that I closed. Microsoft for a 0.88% loss, IBB for a 3.11% loss, and then of course on Verizon here, loss of 3.73% and hit the emergency stop. 95% of the time you are not going to hit your emergency stop. You're going to hit your end of day stop. But of course, Wednesday was a pretty volatile day with the Fed, and I did. So it's a good teaching example of, yes, these emergency stops sometimes do come into place. All right, Microsoft, IBB, and Verizon were all on the daily bars. I also took a trade on the weekly bars. I like to trade multiple time frames. Really liked this trade last week. This weekly bars closed on Friday. We bounced off of the 200-day moving average. That was my entry signal. Of course, I have my emergency stop all the way down here. If we bounce to the 200-day moving average, then my end of day stop is going to be, what do you think? It's, of course, I have my emergency stop in case it gets there, but I bought it because it bounced at the 200-day moving average, and then on Friday it closed below. So unfortunately, another loss here of 5.03%. But if you position size correctly, based upon your time frame and the volatility, it's going to be a very small total loss based upon your total capital. Okay, Twitter, for some reason, and I'm not complaining, Twitter just keeps hanging in there. Very, very glad. I bought Twitter back here on the 13th of September. We came down, here we go. We bounced at the 200-day moving average. I bought this one intraday, and it was a good thing because we had a big fair value gap here, and we also pulled back and bounced at the 200. I felt confident that, and MACD was green, I felt confident that the 200 would hold, and at the very least give me a good risk to reward ratio. Bought here at $40.62. It has been very strong compared to the rest of the market. Hasn't gone up much, but it hasn't gone down, so it shows the relative strength. So this particular trade, still positive, 2.47%, and very grateful for that. Of course, you can see I put my emergency stop down here. My end of day stops where? Just to close below the 200, and so far it has held above the 200, so I am keeping it. And then Google. I did buy Google on Friday with confluence of signals here. The confluence of signals are as follows. We went under 30, over 30 RSI, closed above the 30 RSI, closed at 30.43. Also had an intraday rejection of this negative third ATR channel. 92% of prices tend to stop going down and or bounce when we get to the negative third ATR channel. And you can see it went under the negative third. It's this gray line here, closed back above. Also went under 30, over 30. So that's the other signal as well. And so that's why I bought it. Now, I told you I was going to show you how I take you through these trades. And let's do that right now. So this is Google. I just explained why I entered the trade. So the first thing, when you have your signals, right, when you see your setup, great, but you have to decide how many shares you're going to buy. So I always use a hypothetical $100,000 account. So if you have a $100,000 account, 1% of that is a good rule of thumb as far as what your maximum allowed loss is going to be. So $100,000, 1% of that is $1,000. So the way that I trade and the way that I set up these trades is that I use the 1% rule. So let's use the $100,000. 1% of that is $1,000. If I take $1,000 and I divide it by the value of the 2 ATR channel, see how right here it's $5.93. So I take the $1,000 divided by 5.93, 5.93, and that would tell me to buy 168.6 shares. I just round up to 167. So if you have 167 shares and it moves down 5.93, I just did the division, so that's going to be right about a $1,000 loss. Now, if you have a $50,000 account, 1% of that is going to be 500. If you have a $25,000 account, 1% of that's going to be 250. And so, if you have $1 million account, 1% of that's going to be $10,000, and it's all the same. So you just take your maximum allowed loss divided by the value of the 2 ATR. Now, I mentioned earlier, 95% of the time you are not going to hit your emergency stop. The real reason that I took this trade was the under 30 over 30. So on Monday, if it closes below 30, I will get out of the trade, but I won't lose $1,000, right? I won't lose 1% of that, much less than that. The only way I'm going to lose $1,000 is if intraday or any time during the day, it gets down to my emergency loss, because we took the 1% of 100,000, 1,000, divided by the value of the 2 ATR, divided by 5.93, and that, so you can see how many shares, 169 shares. It shows me exactly 169 shares moves 293, then it's $1,000 loss. But hopefully we don't hit an emergency stop. If it's a loss, hopefully it's just a nice gentle close below the 30 RSI, and then I will get out for less than the emergency stop. But you have to have the emergency stop in there when you just say, hey, enough's enough. This trade is not going my way. Ideally, we would head up. I mean, we did have a little bit of a rally at the end of the day on Friday, and so that's what brought Google back to over 30 RSI. I do want to point out, with this kind of market right now, I am completely staying away from second and third tier companies. I am focusing on the biggest and the best companies out there, the companies I know are going to stay in business, the Googles, the Apples, right? But it's just me. It's not advice, but that's what I'm doing. I'm only going with the biggest and best companies right now, buying the best companies on sale, and that's what the market is allowing you to do right now. The Apples, the Googles, the indexes. So, okay, so that's the setup on Google. I got in at 98.71. It's 98.74, so it's up a few cents, but that's how I structured the trade. I saw the under 30, over 30. I saw the intraday rejection of the negative third ATR channel. That's why I decided to take this particular setup. I take my maximum allowed loss. I divide it by the 2 ATR. That shows me how many shares to buy. It also shows me where my emergency stop is. I do have orange line up here. What's that? Well, whenever I take a trade, if it moves more than, if it moves at least 1.5 ATRs from entry, the emergency stop is 2 ATRs below entry. But here you can see the 1.5 ATR. This is the offensive part. So if I move up to here, then I go into trailing stop mode, but I have to move 1.5 ATRs above. And, in this podcast, I do my best to go over, why I'm taking the trades and my thinking behind it. I don't have time to completely get into all the nuts and bolts and nuances of the trading approaches that I use, but and I'll mention this at the end of the podcast, but I do teach private one-on-one lessons in the evening time via Skype. I teach a 15-hour course. It's great. I've taught people from all over the world, and I teach you step by step how to trade the 5 different approaches that I use. And I think the very best way to learn how to do anything is to have a one-on-one coach or mentor, and that's why I offer the lessons in this format. But I'll mention that at the end. But just did want to mention that I just don't have time in this podcast to go over all the nuances, and that's what I save for the personal one-on-one classes. All right, so that's Google in at 98.71, 98.74. So yeah, tough week last week. I mean, really tough week. I'm just surprised Twitter hung in there, and I'm hoping that we will have a bounce. I was bullish last week, and I was completely wrong on that call. It seemed like things were going well until the Fed meeting, but I'm wrong often, just like a lot of people. But The key is when you're wrong, try to be wrong small. When you're right, have the courage to let that potentially turn into a large win. So those are the positions, the opens and the closed. And let's head over to trading psychology. All right, this is from Dr. Alexander Elder. I'm sure you've heard his name before. I actually have studied personally with Dr. Alexander Elder in Vermont, and I learned a lot. And has a great guy, great trader, great author. And let's see what Alexander Elder has to say today. The market does not know you exist. You can do nothing to influence it. You can only control your behavior. You know, on the surface, this just seems completely obvious, but sometimes the obvious things are the things that we need to concentrate. Yeah, the market doesn't know you exist. It does not care. You cannot do anything to influence. I don't know, unless you have some kind of Jedi mind power. I don't. It would be nice, but I don't. You can only control your behavior. And that's it. You are responsible for what you do in the market. You can't control the market. You can only control what you do. And that's why you need a plan in trading. It's so important to have a plan. You can't control it. It's either going to go up or down, and you have to know what you're going to do when it goes up or when it goes down. And hence that comes back to your plan. So like I said, I hope everyone's staying safe out there. It has been brutal. It seems to be unprecedented what's going on here. And are we going to find a bottom? Yeah, eventually we will. You know, who knows when, but you better have a plan, and you better be able to control what you do and have a plan and stick with that plan and do what your plan tells you to do. So thank you, Dr. Alexander Elder. Appreciate that. And now let's head over and take a look at a poem from Frank. This is my good friend Frank. Please follow him at FrancoD on Twitter. He's a great author. He's a great trader, great journalist, great musician, and a great trading poet. My gosh. Let's read this. Look out below. Traders moving carefully, even kind of slow. Stocks lined up like ducks in a row. Prices try to figure just where they will go. Lately, the catalyst has become, hey, you never know. Isn't that good? Look out below. Yes, we've definitely been going down. Traders moving carefully, even kind of slow. Good idea to do, right? In a situation like this. Stocks lined up like ducks in a row. Prices try to figure where they will go. Lately, the catalyst has become, hey, you never know. And yeah, I mean, that's the case in all of trading. Hey, you never know. So move carefully, even kind of slow, and be patient. Wait for your setups, okay? All right, here we go. Let's take a look at some of the potential setups that I'm looking for next week. Now, some of these have triggered. And the reason I'm bringing them back up because they're big companies, good major cap companies that did have some signals on Friday actually to get long. But if those levels don't hold and they re-trigger next week, that's what I will be looking for. So let's start with Amazon. So Amazon, here we go. It did go under 30 RSI and back over. Now, you can see 3120 is the RSI. I was looking at Amazon, but you see how we're still below the negative third ATR channel, and that is actually why I went with Google instead. I'll go back to Google here. Google also went under 30 over 30, but you see how it also intraday went below the negative third and over the negative third? Now that negative third ATR channel is support, right? And if we go back to Amazon, the reason I didn't take Amazon, we did also go under 30 over 30, but we didn't get back over the negative third ATR channel. That's still resistance. So next week, what I would be looking for on Amazon, because I would like to get some Amazon, is if we had another under 30 and then back over 30, and that it also closed back above the negative third ATR channel. That is what I would be looking for as well. Alternatively, could get long Amazon if we do have a rally on Monday and create a V2. A V2 consists of 3 bars. We don't have Monday's bar yet. Here's bar 1, bar 2 goes below bar 1's low, bar 3 would need to close above bar 1's close. And if it did that, it would also close back above the negative third ATR channel. V1s, V2s are something that I use all the time. They're kind of the bread and butter of my trading. I have a video, free video on YouTube in my lessons playlist called V1s, V2s. So try to check that out if you're interested in these. And then also, of course, in my private 101 classes, we go through painstakingly step-by-step V1s, V2s. But that's what I'm looking for on Amazon next week, is another under 30 over 30 and or a V2 setup where we get back above the negative third ATR channel and we get above day one's close. But that would have to happen on Friday. Let's take a look at the weekly on Amazon. What I also like, because I like to look at multiple time frames and look for multiple support. Well, look, the negative 1 ATR channel here, the green lines, though that is going to be some support. We're not quite there yet, but I like to see support on the weekly and the daily. So on the daily, like I mentioned, it did go under 30 over 30. I would like to see a little bit more support from Amazon on the weekly. Don't know if we're going to get there or not, but nonetheless, if we did go down on next week, if we continue to go down and we get to this negative 1 ATR channel, then any valid signal on the daily would get me long Amazon as well. Let's take a look at Berkshire Hathaway. Well, Berkshire Hathaway also went under 30 over 30. Let's take a look at the weekly. Weekly's kind of in no man's land. That's why I did not take the trade. I would like to see it maybe down here at the negative 2 ATR channel to give me support on the weekly. So, if that happens, then I would be looking for an under 30 over 30 on Berkshire. It already happened on Friday, but who knows if this is going to hold. But if we get another under 30 over 30 next week on Berkshire, I'll be looking to add a great company like Berkshire Hathaway. Caterpillar, first of all, let's take a look at the weekly. What do we got? Wow, look at this. We bounced right at the 200 week moving average, which is good. I really like that. We also have a double bottom with the bullish divergence. Here's this low with deep red MACD bars. We rally into some green. We come back. We test the low. There is less red MACD or less momentum to the downside. And more importantly, we bounced at the 200. This would have been a legitimate entry by itself on a weekly bar. And did not take this, but again, I'm looking on the daily here on Caterpillar, but I'm looking for support on the weekly. It did bounce at the 200. If I'm going to express the trade on the daily, I need a entry signal. Well, look, we're at 29 RSI right now. So keeping in mind the weekly's at the 200, right? Where would be my entry on Caterpillar? If it closed back above the 30 RSI, with the important part of the support on the weekly being at the 200. So support on the weekly is at the 200. Big picture, I like that, but I also need some type of entry signal on Caterpillar, and we're at 29 RSI. So next week, if we were to close above the 30 RSI, that would be the reason that I would take the trade on Caterpillar based upon the weekly being at the 200. All right, next on deck, Cameco CCJ. Cameco has been quite strong compared to the rest of the market, and we did come back and bounce right at the 200-day moving average. I didn't buy this on Friday, but I have been watching Cameco for a reason to get in. Could have got in this on Friday, but of course I picked Google instead. But what I'm looking for next week on CCJ would just be another bounce at the 200 or a close under, close back over. But I only really like to take one trade per day, and I like the Google trade better than Cameco. But Cameco has been strong. It was down 6.37% on Friday, which I didn't like, and I think the relative strength of Google was better, and that's another reason. But if I can get another retest of the 200 and or close under, close back over, you can see we're at the negative third ATR channel here. So that's a nice confluence with a 100-day moving average, the 200-day moving average, and the negative third ATR channel. Also, there's a 300-day moving average under here, which would also be a level next week. But again, another retest of the 200 or a close under, close back over the 200, and or a rejection or close under, close back over of the 300. Let's look at the weekly. Weekly, I like because we found support at the 50-week moving average. So this would have been a legitimate trade based upon the weekly of bouncing right here near the 200 and being right in the value zone and the relative strength of Cameco. But again, next week, if I get another retest of the 200 or the 300, that would be my entry. Well, let's take a look at the Dow Jones. Dow Jones, of course, one of the major indexes. Let's look at the weekly. Weekly did bounce at the 200, which is a good sign. We also have a double bottom bullish divergence here. Here's the first low with the deep red MACD bars. We rally into green momentum MACD bars. We come back down. We test that low. You see how the red MACD bars here are not as deep as over here? That's showing that there is a decrease in this selling momentum. Sure doesn't look like it, but from a MACD perspective, it is. This would have been a legitimate entry off the 200 on the Dow, just on the weekly, but I'm going to wait for the daily. We are at a 2741 RSI, so we're under the 30. If we go up next week and if we were to get over this negative third ATR channel, it would also definitely get us above the 30 RSI. So that's kind of some good news for the indexes, the Qs, the SPY, DIA. Of course, doesn't have to. We could continue to go down, but some real good potential entries next week on the indexes because they're under 30 RSI. If they close back over, that is a great signal on an index, although it doesn't mean it's going to work, but it's a great risk to reward entry. So Dow Jones, based upon the weekly, finding support at the 200-day moving average, and then on the daily, it being under the 30 RSI, interesting. And that's what I'll be looking for. Close back over the 30 RSI, and by default, it would bring us back over the negative third ATR channel. Walt Disney, let's take a look at the weekly. Well, what I like about the weekly is we have come down and found some support at the -1 ATR channel. So I like to look at the larger time frame for support and then look for the entry signal on the daily. So the weekly looks good, right? We're down here. I mean, it's come down with everything else, but we did find some support at the -1 ATR channel. MACD is still green, so big picture, that's where I like the support of the weekly. Looking at the daily, we're at a 29.84. A close back over the 30 RSI would be a legitimate entry on Disney based upon the weekly having support at the -1 ATR channel. Gold. Well, let's look at the weekly first. At the negative third ATR channel, right? We are at the negative third ATR channel on the weekly. So anything on the daily that's a decent entry signal with the support on the weekly being here, I would take. So negative third ATR channel on the weekly. The daily, what would be our next support? Well, this actually would have been a legitimate entry based upon the weekly, right? Being the negative third. Because this did go under 30 over 30. It's still under the negative third ATR channel. That's why I picked Google instead. But if we could get another under 30 over 30, and in particular that closed above the negative third ATR channel, that's why I would get long gold next week. If we have another under 30 over 30, and ideally a close back over the negative third ATR channel so we can have that as support. Google, of course, I already took this. We already went over this, but you can see compared to the other charts that I showed you, that's why I bought this, because it was stronger. It was down 1.4% on the day, but it did rally back. But it went under the negative third, over the negative third, and under the 30, over the 30. I'm already in Alphabet. I'm already in GOOGL. But if we had another under 30, over 30 again, and I wasn't in it, I would take the trade. All right, Goldman Sachs. Let's take a look at Goldman Sachs. Let's take a look at the weekly. Yep, weekly looks like it's holding some support at the -1 ATR channel. So big picture, there is some support here. On the daily, I would need a close back over the 30 RSI. We're at 29.32 right now. We're under the negative third ATR channel. So based upon the weekly, if we were to close back above the 30 RSI, most likely we'd close back above the negative third ATR channel, and that would be my entry. Russell 2000, let's look on the weekly. Well, we did find support on the weekly at the 300-week moving average. You can see last time it found support there, it rallied up. I like to always look back. If I'm looking, in this case, looking at the 300-day moving average, I like to look in the past and go, did it hold support back there? Yes, it did. Does it mean it's going to this time? No, it doesn't, but it's still a good piece of information and intelligence to have, because last time we were here, the market said, no, we don't like it that low after the rejection of the 300, and it did exactly the same thing on the weekly. So this would have been a legitimate entry on the weekly as well, but I'm looking at the larger time frame to look for support so that when I go to the daily, I can look for the entry. Well, we're 28.92. We're very close to the 30 RSI. What I would be looking for in IWM next week would just be a close above the 30 RSI. And a lot of people watch those 30 RSI levels, in particular with the indexes, the SPYs, the Qs, diamonds, and IWM. So historically, they have been very good entry points, but we just need a little rally on Monday, right, to get us back over that 30 for a legitimate entry on IWM. Lockheed Martin, let's take a look. Lockheed Martin has been very strong. I mean, we're not even to the 200. A lot of these indexes and stocks are below the 200 or right at the 200, 250, and 300. This is much stronger. This stock is much stronger than the rest of the market. We are in the value zone, not really at support, but still in the value zone, so the relative strength's good. On the daily now, this would have been a legitimate entry on the daily with an intraday rejection of the 200-day moving average. We also have a double bottom bullish divergence. Here's the first low, very deep red MACD bars. We rallied into some green. We have come back down, equal lows. You see how the red MACD bar is very shallow. This is showing that we are running out of some of sellers, and that's why this MACD reading. And so the implication is if you're running out of sellers or you're running out of momentum, that it will go back the other way. Who knows, right? But I would rather be buying when selling momentum is slowing than when it is increasing. So next week on LMT, Lockheed Martin, I would just look for another rejection of the 200-day moving average. Ideally, if it was even closer to the 200, give me a better risk to reward ratio. All right, let's look at Qs. Well, you can see all the indexes did hold support at the Qs here did hold support at the 200. This would have been a legitimate entry on the weekly just by itself, just with the bounce at the 200-day moving average. And again, look at the double bottom here. Look at the MACD divergence. This bottom deep red MACD bars rally into green, come back down, very close to testing the lows. Very small, very shallow MACD bars here, indicating that this second move down, which looks substantial, but it was not as substantial. It did not have the selling momentum as this first move down. So that is a decent sign. The double bottom, bullish divergence, the bounce at the 200-day moving average. So let's switch to the daily now and say, well, what is my entry signal? Well, very close. Look, we're at 29.78. We closed just tiny bit below the negative third ATR channel. So Monday, or anytime next week, if we have a close back over the 30 RSI, it will also close us back over the negative third ATR channel. So based upon the weekly, the support of the 200, and then on the daily with the entry signal being an under 30 over 30. It's not yet, it's 29.78. It's very close, but it got over the 30 RSI. That would be a great entry signal on a index like the Qs. This is going to look very similar. This is the SPY. You can see the SPY is a little stronger than the Qs because we have not come down to the 200-day moving average. We have the same double bottom bullish divergence situation going on over here. I actually like the Qs a little bit better, right? The Qs are bounced at the 200. The SPY has not bounced at the 200. So I like the Qs better, but nonetheless, on the SPY, we are at a 29.98. If it can close above the 30 RSI, very likely would also get us closed above the negative third ATR channel. So what I'm saying is that if we get a move up next week, it will be a positive sign both technically and emotionally for people that these levels were rejected. So don't anticipate it. Don't look, I'm not going to be taking a position here unless it does that, right? I can have opinions. I'm wrong with opinions all the time, but it's better to go by the price action to show you that the price is actually going in the direction that you want it. So that's what I'm looking for on SPY, is a close back above the 30 RSI. XLE, well, XLE, this would have, let's take a look at the weekly. Weekly, we are right at the 50-week moving average. You can see last time we were there, we bounced beautifully. I think this is below though, 70.91, yeah, and we're at 70.48. So we did actually lose that, but still in the area of the negative 1 ATR channel, the 50 EMA, the 50 SMA, and then on the daily here, this would have been a legitimate entry because of the rejection of the 250. And it is holding the 30 RSI as 31.23. So for me, some different potentials here on energy. To the worst case scenario, if we came down and rejected the negative third AT or the 300-day moving average, I would certainly be looking to buy that here. If we have another intraday rejection of the 250, although this one was perfect but didn't take that to Google instead, I would also look at that. If we had an under 30, over 30 on energy, I would also look at that. Or actually, even if we got above the 200-day moving average, I would also look at that to get long and then just use my end of day stop as the 200-day moving average. Utility sector, let's look at the weekly first. Okay, we bounced at the 50 SMA and EMA. So on a weekly, on the bigger time frame, it did hold support at the 50 EMA and the 50 SMA. So I like that very much, that we bounced there. Big picture. And then on the daily, look at that. That would have been a nice, legitimate, very good risk to reward ratio over the 200-day moving average. And I don't know if this went under 30 or over 30. Let me just measure real quick. No, 32.05. I use Trade Navigator here, and one of the reasons I love it is because of this little tool, this little what if tool. I can measure, did it go under 30? Did it go over 30? But it's definitely a nice feature. This would have been legitimate right here. So next week, if I want to get long energy, what do I do? Well, it already triggered, but I have the 300 SMA, I have the 250 SMA and the 200 SMA. Yeah, I like this very much. I kind of wish I would have taken it, but like I said, I usually take one position per day. But if I wanted to try to get into XLU next week, just have to have another rejection of the 30 RSI or a rejection of the 200-day moving average, or if it moves lower, some kind of rejection of the 250 or the 300. And then lastly, ExxonMobil. Haven't talked about this for a while. ExxonMobil, very, very strong, came down. I'd like to see it get down to this negative 1 ATR channel. You can see last time it was there. That's exactly where it bounced. Let's look at the daily. The daily real magnet here would be the 200-day moving average. And that's why I picked this to show everyone and for myself to look at. I really like this because on the weekly, we're not quite to the negative 1 ATR channel. And if we're drawn to that negative 1 ATR channel on the weekly, there's some support there. And the confluence of support on the daily would be here. A 30 RSI in conjunction with the 200-day moving average would be an excellent place to get long here for me with a good risk to reward ratio. So I will be looking next week specifically. This is one of my favorite setups, but it has to go down more so that the weekly gets to the negative 1 ATR channel and the daily gets to the 200-day moving average. And that would also dovetail with the 30 RSI, depending how far it got down there. So at the beginning of the podcast, I was talking a little bit about the lessons that I teach. And, if you take these lessons, I know you're going to be a better trader. I teach you step by step how to trade all 5 of the different approaches that I use. It's very important to me that my students succeed and learn to become good traders. That's why I started this podcast, and that's why I have those one-on-one courses in the evening time via Skype. The course is a total of 15 hours, one-on-one instruction. We go through all the different trading approaches step by step. Each lesson is 3 hours, and then we have 5 sessions of 3 hours, and that's where you get the 15 hours total. The cost is $1,750, but it's worth every penny. If you're interested, just send me an email. The email is in the link of this YouTube video. Send me an email and say, Greg, I'm potentially interested in taking your course. I will reply and say, that's great. Let's set up a Skype call. The Skype call is free. It's not a sales call, I promise you. I just want to learn more about you and your trading challenges and your goals. It's a good time for you to ask me any questions about the course, and I will answer those for you. And when we're done with the call, it's going to be up to you. If you want to reach back out and say, Greg, I thought about it, I want to take the course, great, be happy to do that, and it's going to be great to work with you. And if we do the Skype call and you decide you don't want to do it, that's totally fine as well. But reach out to me. I know you're going to be happy, and the price of tuition is worth every single penny. Number 2, if you like online courses, I have a really good online course called the Deep Dip Buy Stock Trading Strategy. It's available at udemy.com. The link is in the description of this video. It's a great course, and the Deep Dip Buy Strategy is exactly what we have going on right now in the market. So it's very pertinent to what's going on in the market. So there, in that course, there's 9.5 hours of video. There's 26 videos total. There's 15 study guides. And the best part, it only costs like $10 to $15 on Udemy. And I have sold so many around the world and got so much good feedback. Take a look. The link's in the description. Take the course. I know you're going to love it. And then 2 more things. If you like today's podcast and you found it helpful, or any other podcast helpful, I would appreciate it if you could hit the thumbs up button. Lets YouTube know that there's some valuable content here. And so if you did find something valuable today, I would really appreciate it if you could hit the thumbs up button or share the podcast on social media. And then lastly, and most importantly, please try to go out and do something nice for someone today. If you could also go out and do something nice for an animal today, that would be twice as good. If we all did nice things each day for other people and other animals, the world just by default would be a better place. And so really, that's all I ask. Try to go out, do something nice for another human being, another animal today. And who knows, one day when you need it, hopefully someone will be there for you as well. All right, so I hope you have a good rest of your weekend. I know it's volatile markets, crazy markets. Be very interesting to see what happens next week. If you have any questions or anything I can help you with, you can put them in the comments. I'll do my best to get to them. But have a great rest of your weekend. Get out, get some exercise, maybe do some reading, do some presence work, try to eat healthy, all the things we need to become good traders. And just appreciate you being here today and investing the time. And on the way out here, I have to run the U.S. legal disclaimer. Take care, everyone, and thanks again for stopping in. Bye-bye. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.